I mean, when we look at the timeline of other 232 tariffs that were announced over the past year, we saw a relatively quick window between the initial announcement and then the actual implementation and the deployment of that threat. That has not been the case with semiconductors. And I think this is also important to mention that it's not just a tariff on semiconductors, it's a tariff on semiconductor derivative devices. So a wide range of electronics, which would then, have much more kind of broader, dire consequences for the entire Taiwanese export basket. I think the reason for this is that the U.S. administration has essentially woken up to the fact that the U.S. does not produce a lot of these goods domestically. And given the trends in, say, investment into AI that we're seeing in the U.S., much of the recent economic resilience we've seen in the U.S. growth prints have come from that AI investment specifically. If they were to put tariffs on those shipments, then that could derail a lot of that story. And so there's a very strong domestic incentive not to do that, which benefits, economies like Taiwan, given that Taiwan is, in such a critical part of that supply chain. I think we've seen reports over the last couple of weeks suggesting that these tariffs, might be delayed almost indefinitely. And so in terms of a timeline, initially we were expecting some news around the third quarter of this year. That didn't happen. We were expecting some news before the end of 2025. That also didn't happen. I think this is still going to be a story to watch heading into 2026. But given the fact that when we zoom out, we're seeing Donald Trump take a bit more of a restrained approach to tariffs, at least currently, as kind of he juggles the fact that cost of living pressures and inflation are still weighing on the U.S. consumer heading into a midterm election year. I think that means that the tariff story for chips is likely going to be a little less dire, a little less urgent than we were anticipating earlier in 2025.
Okay, so that's, I guess, kind of a relief, though. But longer term, Nick, the situation kind of reminds me of there's similarities with what's going on with rare earths as well, and that is with semicons. Maybe the Trump administration is trying to give Taiwan not a free pass, but sort of an easier time of it to give themselves time, to buy themselves enough time to continue to onshore and build supply chain and capacity in, let's say, chip making. The same way, things are happening in a similar vein with rare earths.
Yeah, I think that's probably checks out. If you see a lot of the reporting around, potential trade framework between Taiwan and the U.S., there is this kind of recurring component around investment, around Taiwanese firms, kind of bringing their expertise and training American workers to build up that American capacity. And that kind of mirrors some of the trade frameworks that we've seen struck with, Japan, South Korea, the European Union. Clearly, investment is an important aspect of all of this, and that's going to be a framework that likely lends itself to the discussions between the U.S. and Taiwan, given that, again, Taiwan occupies such a critical part of the supply chain. Now, I think there are two sides to this story. Yes, the Taiwanese and TSMC have indicated interest in kind of helping build that resilience, build that capacity in the U.S. But at the same time, Taiwan also knows that it occupies a very critical part of the supply chain. And then as a result, there are not only just kind of trade considerations, but also geopolitical considerations. The Taiwanese government talks about this silicon shield that would deter from, say, a Chinese invasion or encourage the U.S. to intervene if there were to be a conflict in the Taiwan Strait. And so if those, very advanced technologies were to ever leave Taiwan, if the so-called crown jewels of the Taiwanese intellectual property, particularly in advanced chip making, were ever to kind of leave the Taiwanese island, then that would maybe be a consideration that the current government is not very comfortable with. And definitely for companies like TSMC, they want to keep those crown jewels still at home. They're very, very anxious around any potential IP leakage, as well as offering any of their competitors a leg up in the market.
And let's come in on this.
Thanks a lot, Martin. And Nick, you brought up the silicon shield, and I want to ask a little bit more about that. Given that the TSMC is building out $165 billion, multiple fabs, R&D center over in Phoenix, and how strong is the silicon shield? Because, they had said that they want to keep everything close to home, but with this trade deal, well, we're waiting on a final trade deal to come through, because I think technically Taiwan still has yet to come to a trade deal with the United States, even though they've been slapped with 20%. So let's first start with the strength of the silicon shield.
Sure. I think on balance, we think that this argument is still relatively intact. I mean, as much as we're seeing Taiwan, encourage investment into not just the U.S., but also into Japan. I mean, there's a big TSMC fab in Kumamoto, for example. A lot of this production is focused on advanced chips, but not the most advanced chips. The most advanced chips and the R&D that is focused on the really cutting edge of the innovation kind of cycle, that's still very much located and localized in Taiwan. We're not seeing, the most advanced processes that are being discussed in the market leave Taiwan and go to, say, other markets. I think that's one really important aspect of this so-called Silicon Shield, the fact that, yes, we're kind of willing to share our technology with some of our close partners, but at the end of the day, those most innovative parts of the supply chain, those most innovative advanced manufacturing processes, those are still going to remain in Taiwan, not, again, just for the commercial considerations, but also from those geostrategic considerations as well.
We're looking at the export numbers from Taiwan for just the last month, and to the United States, what was it, triple-digit on-year gains. There has been strong demand for semiconductors, and is this the demand for the exports is strong enough to offset the 20% tariff that has been imposed by the United States on the Taiwan economy?
I mean, so far it looks to be the case. I mean, it's incredibly important to remember that, as you guys mentioned, the U.S. tariffs currently in effect have exemptions for chips. And I think those exemptions were initially imposed on the assumption that the 232 sectoral tariff investigation would eventually materialize. And as we just discussed, it hasn't yet come. What that means is that, non-tech exports to the U.S. are still facing a lot of pressure. That's one incentive why Taiwanese trade negotiators are still trying to negotiate that framework with the U.S., especially because when you compare Taiwan to, say, Japan or South Korea, both of which have a 15% rate, Taiwan looks relatively disadvantaged there. That all being said, when you look at the export numbers, when you look at some of the other aspects of the Taiwanese economy, things are still going really well. The Taiwanese economy is just booming. Earlier this year, EIU's real GDP growth forecast for Taiwan was around 3.8%. That was before the tariffs, and people thought that we were crazy. We were just way too bullish on the market. Now, our forecast for Taiwan in 2025 is over 7%. That's higher than the government's estimate, and actually that's lower than some of the other estimates in the market, which are expecting real GDP rates of around, say, 8% or even 9%. I think that really shows that this AI boom has been the main offsetting factor to a lot of the uncertainty that we're seeing stemming from the U.S. tariffs. And a lot of this resilience, a lot of this momentum, it's likely going to cool heading into next year, partially because of what we call high base effects. But it's still going to paints a pretty resilient picture of growth heading into 2026. Our specific growth forecast is around 3.3%. And a lot of that reflects AI demand, kind of enduring, kind of sustained activity on the tech production front. Of course, when you pop up the hood of the Taiwanese economy, there's a lot more to be concerned about. It's an incredibly unbalanced economy. The non-tech exposed parts of the Taiwanese economic engine are not doing as well as, say, the AI exposed parts. And so it's a very nuanced and interesting story, but at least, from the very headline numbers, this looks like it'll be a very, very good year for Taiwan.
So 7.2% growth for Taiwan this year is what you're projecting. That is a far higher than the close to 6% that the statistics chief has already indicated. We'll get more clarity tomorrow when the government comes out with its update and, of course, the forecast for next year. Now, there's this ongoing debate about AI valuations, whether there's an AI bubble, but the tech CEOs that we've been speaking to and hearing from, they say that the demand is there. And give us a little bit your sense on the outlook for next year, because your GDP forecast for Taiwan for next year is 3%. Is this because of high base effect? What is the outlook for this demand for AI and, of course, the impact on the Taiwan economy?
Sure. Well, we're still relatively bullish about what's happening with AI. I mean, yes, there's a lot of chatter around, a potential bubble, and if that bubble were to pop, the consequences for Taiwan would be devastating. But when we look at some of the capex plans that have been communicated by particularly the big U.S. tech giants, we're just seeing a ton of money being thrown into this. And even if we were to see a correction in, say, the equities markets, the actual real investment that's going into a lot of these processes, going into data centers, going into the demand for the intermediate components or the various electronics that are powering a lot of this, that demand looks like it's going to be relatively sticky. I mean, I think AI is a story that's not going to go away. And so even if we see, some concerns around valuations, yes, there'll likely be some kind of turbulence in the market. But really, this is a story that Taiwan is probably going to continue benefiting from over the remainder of this decade. And those capex plans are really kind of the anchor to this. Now, all that being said, the big caveat is when you look at the components of the Taiwanese economy, it is incredibly almost fully driven by exports. When you look at kind of domestic components like gross capital formation, which is a combined measure of investment and stock building, gross capital formation over the third quarter was flat in terms of year-on-year growth. Private consumption is actually struggling. And so this is a story which is, again, very, very wedded to the AI story. If that AI story were to turn, if we were to see that bubble burst, then the Taiwanese economy is incredibly exposed. Its reliance on the tech cycle has just intensified over the past couple of years. And so this story really has two sides to it. Yes, Taiwan is in a great position to take advantage of the current global trends around this global boom in AI development, but it's coming at the expense of industrial diversification. It's coming at the expense that other parts of the economy are not doing as well as the AI exposed sectors. And that's going to be something that's going to weigh on the government heading into next year.
Yeah, this is AI is a cash cow, right, for Taiwan, but you don't want it to turn into sort of a one-trick pony. Understand there. Nick, we've been talking about this whole silicon shield thing. Let's get to a more conventional shield, the military shield. We've got Lai Ching-te now saying he wants to spend $40 billion extra on defense. And I want to ask you, right, because, Taiwan has had a reputation. It's not that they don't spend money on defense, they do, right? But they kind of buy the kind of stuff which is nice and shiny and looks good in parades, but may not necessarily be good for actually defending the island. Do you get a sense that that is starting to change because of influence? There are a ton of activists in D.C. who are more than happy to help Taiwan arm up more.
Yeah, that's right. The focus, particularly from people in D.C., is to encourage Taiwan to lean into this asymmetric kind of weaponry strategy. This idea that you have this porcupine kind of tactic, whereby you resist any kind of assault from China for enough time that the Americans can get involved in any theater of conflict. I think from a pure geostrategic perspective, that probably makes the most sense. There's no real way that Taiwan could kind of match China in terms of military parity, and so making sure that they're able to kind of resist any kind of assault for as long as it takes for, say, the Americans or any American allies to get involved. That's really going to be a key part of the strategy. Thinking about Lai Ching-te's budget, though, it's interesting because his defense budget for next year already, I think, proposed, a 1.25 trillion increase in expenditure. And so this $40 billion additional budget, which is around, I think, 950 billion Taiwanese dollars, that is coming on top of an already very aggressive planned expenditure. And Lai Ching-te has talked about raising Taiwanese defense spending to 3% of GDP. I think he's done this partially in the context of making U.S. trade negotiators happy. We know that Donald Trump is very, very focused on defense spending and the avoidance of free riding by allies. The big question in the room, however, is that he does not control the legislature. His party lost its dominance of the legislative yuan in the January 2024 elections. And we know that the opposition Kuomintang and the Taiwan People's Party are very skeptical of higher expenditure in general, but particularly defense expenditure, given the KMT's kind of sympathies with China. What that means is that even though we're seeing a lot of this rhetoric coming out, it doesn't necessarily mean that the president's going to be able to actually execute or implement this agenda. And so as this budget kind of traverses its way through the parliament, it's going to be really interesting to watch to see, whether Lai Ching-te is able to get the opposition on board. I think based on what we've seen over the past couple of years, it looks like a pretty pessimistic prognosis, but this is going to be a very interesting theme to look at as we head into 2026.